So we'll get right into the higher time frames, and then we'll dissect the trade I took in. It was in New York as well as a long entry. So right away, what do I see? Well, price has sold off aggressively through these lows, okay, which we've discussed in previous videos, okay, and then we finally went bullish, all right, after off the back of FOMC here, approached the highs, and then respected them, okay, and engineered liquidity. Okay, so now we have that target. Okay, now we have that reason to go higher. All right, so end of last week we sold off. Look how we left liquidity here as well. So another little hint. And then we sold off. And where did we sell off right into? Right into a liquidity block. Okay, so we can mark this on just like this. Perfect. Go on to the 5-minute. So again, this is late last week. And what did we do right before we tapped into it? We had this little internal fake break of structure to induce buyers into the market. And then we took out the lows. Okay, so we trapped those buyers, tapped into this area from the left. Okay, this liquidity block. Why is it respected? Well, there's no liquidity below this low, right? So that's why we have that mitigation and we move away from there. Coming into Monday, London session, look how we now take out this high to the left. So what can you expect when we take out liquidity to the left? Well, we can expect price to take liquidity on the opposite direction, meaning lows now, right? So take out the highs, right? Look at all this liquidity we left here from Friday. Take out those highs, and then price comes back and takes out lows, right? Now, why is this important? Well, since we've taken out lows here, lows here, lows here, retail sees this as BOS, so automatically we're going to have lots of liquidity above this high, okay? And that's what we're going to be targeting here. Any longs that are taken here, we're targeting here, all right? So, going to the 1. Now, this is not where I took my entry. I took my entry a little later in New York, which we'll discuss. So, but there was some entries that were available here. Okay, so right away, what do I see? Price takes a high here, induces buyers, and then comes down and takes the low to trap them. Perfect. Then we kind of screw around here for a little bit. It's kind of like a dead time, 6-ish. It's like 2 hours before New York Open. But you can see here, just reacting to price action, we take some lows here and we move away. Okay, and before we move away, we actually respect this high for a quick second and print a possible inducement low. And then price returns to the highs. Oops. And look how we are starting to build liquidity at that high, right? Once, stab into it, twice here, and then 3 times. Look how we get that false sell-off. As we know, price does not just move like this. We don't just respect highs and get big sell-offs. So you can expect this to be false, right? And look what happens. We take out this inducement low. We clear these little equal lows here and tap into liquidity block. Oops. Boom. Okay. And then we go bullish for a bit and look how we come back to the highs, print this low, and then we move away. What is this low not considered? Inducement low. And we'll come back to that in a bit. Perfect. So now we're going bullish. Let's say you had any entries. Let's say you didn't have to wait for the candle to get tapped. You could have waited for the imbalance to get tapped into, which would have been right here. Entry would have been 2.3, so you can go 3 pips. And a nice and easy one back to the highs. That would have been a possible 1 to 6-ish, just like that. Okay, now we've taken the highs. Okay, we've grabbed liquidity. What can we expect? Bearish price action. Okay, so you want to be paying yourself or you want to be closing your position here. One or the other. Okay, holding full position after we take out some sort of structural point, aka liquidity as well, would be foolish to say the least. All right, so again, we take out the highs here, and now we're starting to go bearish. This is in New York Open, 10 a.m. Okay, so what do I see right away? Again, same thing. Price induces higher, okay? And then we get that big sell-off, taking out this low here, which again, what does this do? Well, false break of structure, right? So this induces sellers into the market. And this is going to be a trap, okay? And a future target as well. All right, so first, what is the first step to our strategy? Well, we need to see a buildup occur in the market, and that's exactly what we get here. We get a sell-off right down to this 1 minute liquidity block. Respect it, okay? We go long. We even get some internal highs taken out here, which retail might see as a BOS, okay? So we simply just need to grab this low to the left. That's where liquidity is going to be left, all right? Because if anyone was to take buy entries here, stops go below, right? So we're going to grab that low to the left-hand side here, drag it across. Now, how can we take the entry? Well, you can simply wait for the liquidity to get taken and look for some sort of confirmation, or look at this inducement low that we marked on from the left, right? Essentially that like that last point of liquidity here. And what do we got right below? Liquidity block. Perfect. So entry was taken just like this, 11.4 I was in at. And to the low was 0.92, so we can go 0.87, so half a pip of breathing room. And I actually took partials. I held this a little longer than usual. I took partials at 1 hour imbalance up here. Just like that. Okay, so that was my target. You can see I got tagged in New York, a little later in New York, and then came out to the highs. Something I expected to happen was to take out the inducement high, respect it, and build liquidity at the highs, which is like exactly what we did. And then we came to the lows, took out the low. Check this out. Okay, took the highs, induced buyers, and then trapped them down here. Okay, and then we continued going bullish. And there's the highs taken there. If we continue, I believe in London, and there's that target there. Okay, so understand, I really want you guys to understand why the entry was taken down here, right? So you have to understand that we're taking entries off these liquidity blocks, but why are we taking entries off these liquidity blocks? Same thing all the time. There's no liquidity below this low yet, so that's why price comes down, respects this liquidity block area, and you can see on the 1 minute you have your imbalances. But we respect this liquidity block area, all right, and then we move away from there again because that's like there's no liquidity below this low, so we have that mitigation, and that's why price respects it, and we move away from there. So that's the importance behind these liquidity blocks. All right, so the way I just refined it using the M5 was I just grabbed the last low, okay, before the liquidity block here. So this is the overall low of the liquidity block. This is the last low before it. So essentially anything below this low is a valid buy. Okay, so that's why I grabbed it. And as soon as we ram that low, I press buy with my stop tuck below my liquidity block. And again, just targeting that liquidity. Okay, so I hope you guys enjoyed this case study. And yeah, I'll see you guys in the next one.